Welcome. This is the Insider's Edge to Real Estate Investing with James Nelson, the principal and head of Avis & Young's Tri-State Investment Sales Group. In this program, you'll learn game-changing strategies to outperform the market. James will teach you how to source, execute, and capitalize on the best real estate opportunities in New York and around the world. Now, here's your host.
This podcast is for educational purposes only and should not be relied upon for investment decisions. The opinions expressed are those of the guests and not their companies. Listeners should not act upon the information without first seeking appropriate advice from an accountant, lawyer, or other professional.
Welcome, everyone. I'm James Nelson, your host, principal and head of Tri-State Investment Sales at Avis & Young. And today we have back on the show Alex Rabin by popular demand. We've started to have some of our earlier guests coming back. We've stepped up our game since then. So if you're listening to this on Apple, Spotify, or wherever you get your podcasts, we also have the video format that you can find on Instagram, LinkedIn, YouTube. We're definitely stepping up our game, as is Alex Rabin. He's got an incredible story. He's principal and co-founder and head of investments and acquisitions at Peak. Before he was a VP for 7 years at RWN, where we had a chance to do a lot of business with him. Prior to joining RWN, Alex spent time at Tiacref and also at Stellar Management. What I love about Alex's story, how they've really built this vertically integrated company. We talked a lot about how he finds opportunities, how he cultivates relationships. There's a lot in here that I know you're going to get out of this episode. So as always, go to jamesnelson.com. This site is not about me. I built this site for you to help you gain the insider's edge to real estate investing. That's where you can find the show notes for this episode. You can find out how to follow what Alex and Peak are doing, as well as some helpful articles. We contribute weekly to Forbes.com. If you haven't seen those articles, you should definitely take a look as well. We're going to have a brief word from our sponsor, and we'll get right into that interview with Alex Rabin.
A different approach to putting our clients first. Avis & Young's Tri-State Investment Sales Group sells multifamily, office, retail, development, and specialty sales throughout the New York metro area. As experienced thought leaders in their industry, our 35-member group is available to help you make informed investment decisions by advising you on your current holdings or identifying new opportunities in the marketplace. Our one unified team is built on an industry-unique platform which promotes unparalleled collaboration and teamwork. We share core values of hard work, integrity, and expertise. We put our clients first, providing tailor-made strategies to achieve superior results. Please visit us at aytristateinvestmentsales.com and follow us on Twitter, LinkedIn, and Instagram at JamesNelsonNYC to learn more.
Welcome, everyone. We have back with us today Alex Rabin, who is principal and co-founder and head of investments at Peak. Alex, great to see you.
Thanks for having me.
So, Alex, I'm really excited for this conversation because I think it's been about, say, 2 years or so since you came on my podcast along with Alex Cascal. And I remember I was late for the podcast, so I actually called in on my cell phone. I was in a restaurant. It was, all kinds of noise going on. So we've stepped up our game. I'm now appearing from the studio. But look, when we were speaking, and maybe it was a little longer than 2 years ago, but you were really just getting Peak rolling. Obviously had deals under your belt. I loved what you were and continue to love what you're doing, getting the word out there. Not just your investments, but also really created a brand. And that was I know we got a lot of positive feedback from our audience on that. So since we had that conversation, you've been very busy. In fact, I know we were trying to schedule this. Maybe this is the second or third time we've tried to schedule this, because the last few times you said, James, love to come speak, but I've got a closing. So closings always come first, of course. But want to welcome you back and thank you for taking the time.
Thanks for having me.
For your audience, why don't you just give us a little overview on what Peak has become today? So maybe give a little sense about the company and what your current holdings are.
Look, Peak is a value-add multifamily shop. Really, we're focused on creating high-end, walk-up housing for the most part. We have a few elevator buildings, but really looking to appeal to the young professional demographic, 25 to 35 years old. People that want to be in New York City, want to benefit from the, amenities of New York, whether that's, restaurants, nightlife, shows, have access to all that at a price point that is relatively affordable. So really, what we try to do is create really high quality product at a discount to doorman elevator buildings. Generally, we try to be about a 15 to 20% discount to kind of, the highly amenitized, doorman elevator buildings. And we really take pride in creating really high quality rental product. And in our buildings, we fully reposition everything from, new intercom system, beautifying the facade, renovating hallways. We really don't want to leave, any stone unturned. So, everything from new lighting, incorporating modern artwork, new moldings, renovating stair treads, railings, really upgrading, the building completely, upgrading electric, upgrading plumbing, all base building systems, fully renovating apartments, high-end finishes in the kitchens and bathrooms, really reconfiguring unit layouts to maximize efficiencies, whether that's, adding bedroom density to create share units or just creating more efficient layouts. We really want to, create, that high quality product that is almost a condo level finish, which really drags the renter in. They, from the moment they walk in a peak building, they see a different quality of product. And, we take great pride in that. People, live in our buildings, and, for us, we want it to be something that they're proud of, that we're proud of. And that's something that we take, real pride in. So we've built the business now to 75 buildings. It's roughly about 1,000 units under management. We're fully vertically integrated. We do everything from, obviously the acquisition asset management to construction management, leasing, and now actually effectively, we're involved in the property management as well. So, under the Peak kind of umbrella, we're fully vertically integrated.
That was a great overview. And first of all, 75 acquisitions, 1,000 units. I mean, I see how busy you all are. I mean, we've certainly transacted successfully with you multiple times, but I mean, that's a staggering number. How many years has Peak been in existence for now?
So we bought our first building in 2018. Mm-hmm. It's kind of funny because at the time it really just started as more of like, I don't want to say a hobby, but it was just kind of a side investment. I was at RWN at the time, working for Ari Shalom, doing more on the private equity side of the business, very similar arena, but in the private equity side of the world. And, we bought one deal in Queens. David would, at the time, was an investment sales broker. He actually bought a building right before that on Spring Street, 39 Spring Street, and he repositioned the building, did a great job. And actually, I wanted to buy it at RWN. We didn't. It ended up being a home run for him. So when I found this deal in Sunnyside, Queens, and came to him, with a thesis really that, Queens was kind of the, especially Sunnyside, was kind of the next frontier of Long Island City, and, the natural need for more quality, value-oriented housing. We did that deal, and then, really didn't do many deals for about a year or two. But then in 2020, when I went full-time, that's really when COVID happened. Mm-hmm. And we really just saw that as an opportunity to invest in, New York City housing. Everybody was doubting New York. It was very challenging to invest here. And, both David and I are born and raised New Yorkers, native to New York City. And it just seemed crazy to me, that people were down on New York and not investing long term here. And we saw that as an opportunity. Pricing was obviously highly attractive if you can find the right equity and debt sources. And we used that as an opportunity to build our business. It was a lot of hard work. There were times where we were shut down during construction. There was times where, equity and debt was almost impossible to find. But we kind of scrapped it together and worked hard and built the platform that we have today.
Amazing. I mean, even it was so difficult to transact in 2020 for obvious reasons. And so even if you kind of leave that in the equation, I mean, you're still acquiring almost a building a month, right? And these aren't, and I know we have some people who listen to this across the country, and, this is really a show about doing serious investments, building a platform like you all have. But, I think even the fix it and flippers out there, if we said, hey, you're doing a deal a month, I mean, doesn't matter what you're buying and selling, that's a lot of deal flow. So really curious about how you built your platform to accommodate that volume, because again, to have that type of deal flow, right? I mean, first of all, I got to imagine that the top of the funnel, as far as sourcing opportunities, right? To actually sign a deal every single month. I mean, how many deals do you think you have to look at, and how do you source those? How do you, what's the team that has to analyze that to figure out and negotiate?
Well, look, I think it's multiple things. I mean, one, I think it's about having the right team and the right split of responsibilities from, the day we started. We didn't start with one or two partners. We started with 4 partners. So, we had both, myself more on the acquisition side. We had Alex Keskel on the asset management side, David, and Omne really running the construction and operations. And, everybody had a good amount of institutional experience and relationships. And by having that division of responsibilities, it really allowed us to, set up a program. And that's kind of what really allowed us to scale. It was about creating a formula that worked, and everybody kind of knowing their roles and responsibilities and the scope of work that was needed to be done, so that we can just not do one, but do multiple deals, and not really trying to change the wheel a lot. If you look at any one of our, we change something, sometimes the lobby or the facade's a little bit different depending on the character of the building. But for the most part, our renovations are all the same scope. It's almost a processing factory of from the moment we buy a building and are renovating it, whether it's our, construction team, our leasing team, our marketing team, anybody that is working as a part of our global process knows exactly what is being done. And it's very scalable that way if it's kind of rinse and repeat. And it happens a lot when investors come, to tour our properties, after they see 3 or 4 buildings, they totally get the kind of theme that we're working on, because it's all very, common and similar. Mm-hmm. And as far as sourcing deals, it's really based on, I would say a lot of hard work and building relationships in the business. I mean, a lot of it is, from my background, and, it's from 13 years of networking and going to events and, going to breakfast, lunch, and dinner with, different people, whether it's, partners, operators, brokers, lenders, you name it, and just building, the right relationships with people where, you're one of their first 2 sources, that they come to. And it's about knowing that you're actually going to transact and be a quality, party to work with.
So how many people do you have at peak now?
We're 14 people. It's 7 people on the principal investment side, and then 7 on the management side. So we have 4 partners. We have 2, mid-level associates that are working, 1 in asset management, 1 in acquisitions, and then we have a full-time leasing person. So, we also try to keep it very lean as well. We want to have the right staff, but at the same time, you don't want to get distracted by having too many people.
I know this episode is going to be so helpful for listeners, whether they're thinking about leaving, maybe their current role, starting their own investment platform like you did, or whether it's someone who's already scaled and delivered and developed a business. And, the question I want to ask you is, you're obviously one of the founders, you're overseeing the whole vertical, as you said, but you're still, to me, a deal guy, right? So you're still, if I send you something, you're going to get back to me very quickly. You don't hesitate to kind of jump in. So I guess for those out there who are looking to scale their business, so, I mean, what you've done, again, is remarkable, the volume that you do. I mean, there's a lot of successful investors out there that maybe do 1 or 2 deals a year. So maybe they can get in the weeds and do that. But how do you do both? How do you scale this, and how do you do volume? How do you oversee and grow your company, but also, get in the weeds, so to speak, and actually analyze deals? Or are you just kind of more kind of the point on it? You've got the relationships, and then you have the analyst run with it. How do you manage that process?
Yeah, well, look, I think first and foremost, this is where I find exciting about the business, and what I enjoy every day is looking at deals and analyzing deals, and the whole art of finding a good deal and closing it, and that's what really excites me. So it's my passion and kind of what drives a lot of the business. And it's important for me to be involved in it because, for the best types of deals that we're going to get, especially if it's an off-market deal or a relationship, the broker wants to know I'm involved, and they want to, know that I'm focused on it, and that we're actually going to take it seriously and close on it. And a lot of the reason why we get good deals is because we're very responsive, and I'm very involved and respond very quickly. But it's also, about having the right team and trusting your partners. I have a great team around me, whether it's, on the analytical side, we have, great analysts working for us that run the numbers and are very adept at that part of the business. But it's also, having, my other, principal partners that are really, getting the construction and asset management done while I can really focus, on the investment side. Yes, I'm obviously involved in any important issues that come on the asset management and operational side. But, at some point you really have to, find a division of responsibilities and trust your partners if you're going to want to grow.
I really, and hope you don't mind digging deep on this whole scaling of the business, because I think that's, again, so exciting, for our audience, and think about, for those who maybe have invested, done a deal or two, but they really want to ramp it up. I would imagine it, and you've got a great institutional background. You spent time at TIAA-CREF, you were at Stellar as well. I would imagine and I saw some of your early deals that you were raising for, and even though it was, maybe it was $1 million, $2 million deal, there was a 30-page, very professional looking book that you treated that small deal as if it was a $100 million deal. Was that just kind of the way you operated, or were you thinking, okay, I'm going to build this right from the ground up, so when we scale this thing, we're doing things in the right way?
Yeah, I mean, look, I think it's a few things. I mean, obviously, doing it the right way from the beginning was very important to us. I came from an institutional background, both at RWN, Stellar, TIAA-CREF, where I saw, the right ways people did things. And I know that, that's very important to investors, and building, the foundation from the beginning is really important to do it in an institutional way and create quality product. And that's also why we renovate to such a high level and don't just, there's a lot of operators in the business that just kind of do cosmetic renovations. They don't do the hallways, they don't do the base building systems, and don't really do a full renovation of the property. And, that really, speaks to the character of the firm and to, really the platform. And especially as you build scale, it really doesn't show well. And for us, we really wanted to do it a quality way from the beginning. And, based on our backgrounds, we were really, self-made. So we had to start with kind of smaller deals, whether it was a $1-2 million raise, even though, we had this institutional background, but we did it organically. We kind of, started with these kind of smaller deals in Queens. We kind of came up with this thesis that, Queens was this frontier, especially Astoria, Long Island City, and Sunnyside, areas that basically, had really high quality tenancy, and within 25 minutes of Midtown Manhattan, but we could buy at a much, cheaper price point, and there was just a lot less competition. So that's where we started, and we've really evolved the firm from there to, being very active in the prime neighborhoods of Brooklyn, and now, even more so, we're focused, pretty much exclusively on Manhattan, for the most part. We'll obviously do stuff in, the prime neighborhoods of Williamsburg, Park Slope, Brooklyn Heights, etc. But, we've continued to just focus on, more institutional assets as we've, evolved our business.
Yeah, what was really interesting about where you began to grow your portfolio. I mean, I think I'd be surprised if you told me at the time when you were buying the deals that you were in Queens, and I'm sure, the goal was always to scale and have those efficiencies, but I'm sure you weren't bumping into a lot of institutional competition. I mean, I guess maybe in Brooklyn and, Carlisle was quietly acquiring buildings, and now they've got a couple hundred, multifamilies in their portfolio there. But was it part of that inefficiency that attracted you to that? Because, one of the things we talk about in the Insider's Edge to real estate investing is where can you gain the advantage? Where can you, because if you're going into a marketed process and everybody's looking at the deal, I mean, sure, if you have conviction and you can add the right value, but I got to imagine, a lot of the deals that you were buying and whether you were sourcing them directly or from small brokers, probably was your view at the time that this was kind of just being overlooked and you really was able to go about the investment thesis and kind of see the bigger picture there?
Yeah, there was just a lot of inefficiencies in that market, whether it was on the sourcing side, a lot of brokers were not focused on the Queens market. You didn't really have as much of the Marcus, Avis and Young, Cushman Wakefield, really focused on that market. And, what didn't make a lot of sense to me is this was like really quality neighborhoods. I mean, between Sunnyside, Long Island City, Astoria, you had, 3 neighborhoods all within, 25 minutes of Midtown. By public transportation, all good, like middle to upper middle class neighborhoods, good walkability for the most part in these pockets with good access to transportation, safe neighborhoods. They were pricing at a significant discount to Brooklyn. And I saw kind of what was going on in the Brooklyn market and it just didn't make sense to me. And that's really, what led us to build what is now, roughly a 30 building portfolio in, those major Queens markets.
One last question on scaling the business, and that is building the team around it. So I think I'd be surprised if you told me that you had 14 people day one. I mean, clearly you have to have the workflow, and I doubt you'd say that you were vertically integrated day one. So I guess you started small, and as you started acquiring more buildings, did the fees on those buildings then kind of throw off enough revenue to support, full-time positions? Or were you thinking, okay, well, if I went to a third-party manager, it would cost me 4 or 5% of the revenue, but I'm going to keep that in-house so I can justify just paying that salary instead? Like, how did you kind of manage growing your team? Did you decide to kind of keep everything in-house, which again is tough to do when you have a small portfolio? So what, if that question makes sense, like how did you build the team to accommodate it? And when did you kind of make that decision that, yeah, we are going to be vertically integrated?
I think, it really came from the benefit of being at a private equity firm first, working as an acquisition person, in a middle market private equity firm that saw, 5, 6 different multifamily operators, and how they operate. I got to see the good parts, the bad parts, and inefficiencies of certain operators and what was important to really grow and scale your business. And one of the most important things, and I know, it was always, really stressed to me from, the company that I worked for before was, it's always important to have the right people and really invest in, the people around you. And sometimes it's better to be a little, like early in the process of being, overstaffed, as long as you're doing it, mindfully. And really invest in the asset management and operations of the business, because, if you can show people that you can be a quality operator and really do a great job on the execution, it's going to keep investors happy with you and reinvesting with you. And we knew that was really important. So, yes, it's always important to make fees and carry your business, because otherwise, you'll go out of business. But, it's really important making sure you have the right platform to sustain that growth, because otherwise, you're just going to have a lot of unhappy people with you. And it's just fortunate that I was able to have that experience and really truly understand like what the investors want and mistakes and that other operators might have made, early in the process, and trying to be ahead of that. And we've done it all slowly, organically. Like first we started, with the construction management, and that was something, that was kind of just nature of doing the value add business. And then, as we continue to evolve, we noticed that, especially in Queens, there was not a lot of, active leasing brokers at the time. I had a lot of experience working with Bold, for example, that was really active in Manhattan and, somewhat Brooklyn, but there was no one really focused in Queens. So, we knew the market better than anybody. We knew obviously the value add that we were doing and the quality of the product, better than anybody. So, we just started doing the leasing ourselves. We hired a leasing person and started focusing on that. And it worked out really well. We were consistently achieving above underwriting, and that allowed us to start a leasing platform. And then as we've continued to scale, we got to the level where it really made sense for us to invest in a property management business. And effectively in October, we just started that platform, or that vertical of our business. And we're, very excited, to be now fully vertically integrated, which really just gives us better control overall and oversight over the business.
That makes a ton of sense. And, to have that hands-on approach and be overseeing the asset every single day. I would imagine, though, the decision to keep in-house as opposed to outsource, I mean, there are some trade-offs, right? So if you're working with a rental broker and that's all they do and that's their full-time job, and they work for a big firm that has a lot of agents, or, a third-party manager, maybe they have more efficiencies, maybe they can negotiate better deals because they, whatever it is, dealing with insurance companies or contracts. So like, are there any trade-offs with that where sometimes you feel like you're maybe not getting the benefit of leveraging better service or pricing from a bigger platform?
I mean, look, I think there's always trade-offs. There's definitely some benefit. When I was at the private equity firm before, I used to use third-party, rental agents because it was very helpful to get data across the market of, multiple different operators and multiple different things that they were working on. And that's obviously some benefit. But on the other side, I think there's a piece of like, nobody cares about your business as much as you do. So, the blood, sweat, and tears that we put into what we do, we really pound the pavement, and it's important to us. We're only not driven by the, success of the lease or the, delivering, on time and on budget. But, this is ultimately, we're the investor at the end of the day, and making sure that is successful is extremely important to us. And, we just have faith in ourselves to execute well.
I'd now like to go back to what you were saying earlier about kind of how you started Peak. And you said it started almost as a hobby. And previously we were at RWN working with Ari Shalom. I actually had lunch with him yesterday. He's been on this show, incredible investor, incredible mentor. So I would imagine, your time spent there was super helpful. And, to me, that's kind of a unique opportunity where you were able to kind of pursue some personal investments. And obviously these were smaller deals that would never, conflict or, be of interest for the larger firm. But how did you manage that? Because again, you want to make sure that, while you were there, that was your priority. The rest of the investment was a hobby. But so first of all, how did that go? And then at what point did you say, okay, this is becoming way more than a hobby and I need to make the leap here?
Yeah, I mean, look, it started with, the firm and myself, was always entrepreneurial. And I think in the nature of being an acquisition person, there has to be some entrepreneurial part of you that, it's about the chase of the deal and trying to find, a great opportunity and close the deal. And, by the nature of doing a lot of deals, I eventually kind of had the interest of doing something for myself, and building wealth for my family. And essentially I found a good deal off market that somebody brought us. And it was a smaller deal, at the time. I think it was like a $2 million transaction. Most of, RWN's transactions at the time. I think a minimum equity check would have been 5 million to 25 million. So and especially they weren't really investing in the boroughs. Every deal that RWN did was in Manhattan. So it wasn't a fit. And I basically approached Ari at the time and asked him if I could do this. And he was very supportive. And I think that's, a huge part of our success is, I was able to have the fortunate part of working at a very small team that, and somebody that, I got exposure to seeing every facet of the business, seeing everything from, the acquisition to closing the deal to asset managing the deals and, really being able to see all parts of the business allowed us to, have the experience to really operate deals on our own. And I think it was important finding the right mentor that was really interested in, in building, myself versus, just having me as an analyst working for him and crunching models all the time. It was important, to really be a leader and career mentor to, see my career blossom to where it has today.
I know there's someone listening, or maybe they're watching this on the live stream right now, who's sitting at a bigger shop right now, and they're getting the itch. And a lot of aspiring investors, it makes sense to go work at a bigger shop, or in this case, you said you're on the private equity side of the equation, but which is, I think, in many ways probably better experience because you have the chance to see a lot of different operator sponsors, see how they are running deals, see what works, what doesn't work. You're seeing how deals are capitalized. I mean, you really had a great seat to understand, the whole arc of the transaction. Obviously, you had to figure out then, how to actually operate and do all that. I have no doubt there's going to be people who are listening to this right now who are saying, okay, I'm working at a bigger shop, trying to figure out when's the right time? How do I go off and do it on my own? To kind of do it the way you did, you kind of had a running start to have a deal or two under your belt. But I think the key thing, which is really important that everybody listens to, is you went and you had a conversation, and maybe that works at a smaller shop. If you're working at a big institution, they're going to say, hey, time out. We don't, if you're doing, your personal investments, that could definitely end up taking away your focus, creating conflict, whatever it is. So again, it really kind of depends where you are, but I think the most important thing is to communicate. So the fact that you went to Ari and said, okay, this is something that I'd like to do. Does this work for you? You did it in the right way. And then when it really became the point where it was scaling, you said, okay, this needs my full-time attention. So a lot of great, helpful information there. Alex, what I'd love to talk to you about next, and this has got to be one of the top things, I was speaking last night at NYU. I go and speak to a lot of classes and investors and ask, how many of you are invested in real estate? And usually if I'm in a room, maybe 10 or 15% of the hands go up. And then you ask who else would like to invest in real estate? And basically every other hand goes up. I mean, if you're in one of these real estate classes and you don't want to invest in real estate, there are some people who just say, look, I'd rather just be an analyst. I'd rather just go run numbers. I don't want to take the risks. So that's, of course, totally fine. But the point is, for those who have not invested yet, my next question is, well, what's stopping you? And, some of the first answers are, well, lack of experience, right? Okay, that makes sense. Lack of knowledge. Okay, well, they're in the class now. But the really big thing is lack of capital, right? So unless and sure, we might have some listeners who are part of a family business and, they got tens of millions of dollars to deploy. But most people, and I doubt you're going to tell me that you fell into that camp, you're going to probably say, hey, from the start, I had to go out and raise money. And that, for most investors, I think is one of the toughest parts, like the finding the deal. That's the exciting part. Everybody loves the thrill of the hunt and the negotiating. Raising the capital, I haven't heard many people who say that they're excited about raising capital, but clearly you've been very good at this. So for our audience, talk about how you built your investor base. So you started with that $2 million deal. I don't know if that was the proverbial friends and family that you went out to first. What did that look like? And then from there, how did you grow your investor base?
Yeah, I mean, the first one was syndicated. I think we had about, 15, 20 people in the first deal. It actually happened to be a lot of real estate people because that was, a lot of our network. But, that's really how we started it. I think my situation is a little bit unique, or Peak in general is a little unique, especially given my background coming from, the LP private equity side of the world. I knew a lot of, what was important to, a family office or a limited partner investor. And I knew a lot of the hot buttons that would, really be an issue for them, and what was really important for them to see, and important for us to, present to these investors to show as a quality sponsor. And we really, implemented that from day one. So I think that benefit, was huge when scaling and really starting to talk to family offices and private equity firms, about our business, and really allowed us to present very well. But it's not short of hard work. Look, there's no easy way to do it. And it was a lot of pounding the pavement and a lot of interviews and, constantly just outreach. It's no different than, pounding the pavement for deals. We were trying to meet as many investors as possible and telling our, and I think that's a huge part that's very important, is coming up with a thesis that makes sense. I think a lot of, why we had early success is, we were focused on value add multifamily. And at the time we were very focused on Queens specifically, a specific niche where we saw an opportunity, to create a competitive advantage. And I think people liked that we were very hyper focused. We weren't focused on doing, industrial office, working on, Florida, New York, different Southeast markets. From the day that we started, 75 deals ago, we've been focused on value add New York City multi-mixed use deals. And that's what we've continued to focus on. And investors really come to us as a specialist in that space. They want to know that we have a competitive advantage for sourcing deals and have that network, and that we have, kind of this machine to operate deals, both from, the construction, leasing, and management side.
This is awesome. And I really hope people are taking notes here, because you just said some really great information. And I was talking about this last night at NYU, and also it's in my book, about having that business plan, having specialization, and really creating that value, that opportunity. This is a real estate investment opportunity that someone might not have otherwise. So, the example I threw out to class last night is up in the Bronx, they're about to open up a couple subway stations. And I said, what do you all think is going to happen to real estate values once that happens? Okay, so maybe you become an expert, you learn that area, you learn the trades, you get deal flow, and then you explain to them, okay, well, here's another area of the Bronx that has great subway transportation. This is what the retail rents are versus where they are now. And so we're going to go in and buy this, and we're going to get a pop, right? So right off the bat, there's a story to it, right? Why are you doing it? You saw the opportunity. You saw the inefficiencies in Queens that you could capitalize on. So that's super helpful. But Alex, if you don't mind, just because again, I think it's going to be helpful to our audience. So that first deal, whether it was 15, 20 investors. So, I mean, it sounds like, a lot of these investors, if you did a $2 million deal, and let's say you're borrowing, $1.2 million, $1.3 million, so most of these investors were probably, $50,000, maybe $2,500K. I mean, what were these conversations like? I mean, it was kind of like, here's the deck. Are you in? Are you out? I mean, was there a lot of back and forth? Were people trying to change the terms? Were you having to chase people? Just so, our aspiring sponsors or operators out there kind of understand the process of actually landing these investors and getting them signed up on the deal.
Yeah, I mean, look, we had a professional deck. We kind of sent it to kind of our friends and family network, and it actually was a pretty straightforward process from the beginning, at least from our circumstance. We were fortunate to have, a good reputation in the business and had a good institutional network. And, through doing that, we had a lot of confidence in us to operate this deal. And people also just generally liked the metrics of what we were doing. And that allowed us to piece it together. But it definitely, doing it the first time is never easy. It was scary, and we were taking a big leap of faith, putting up a few $100,000, ourselves, which at the time was a lot of money, and putting this together. And there's never an easy time to do it. And people ask that question a lot, to me as an operator and entrepreneur, especially in the real estate space. And, I think at a certain time, you just have to have some faith in yourself that you're going to get it done. And there's never going to be an easy time to do that first deal. So, either you're built this way and willing to take the risk and believe in yourself, or, maybe it's just not the right space for you.
Love that. And that was definitely Jordan Vogel's, and I'm sure you know Jordan and his story. And, same thing when he talked about his first deal, and you call it a leap of faith, but it was really confidence that, hey, this is going to work out and I'm willing to take that bet on myself. So Alex, talk about, now fast forward, I guess this is 5 years later from your co-founding peak. So, the larger deals, we talked about how did you do that first deal with the friends and family? Let's talk about some of your largest deals. So what was some of your most significant acquisitions to date?
So we acquired 50 units in Gramercy, which is actually now on the market to sell with JLL. We have another 50 unit asset in Long Island City that we renovated. We just closed on actually with you guys, 40 units in the East Village that we're currently going through a value add business plan. And then what
kind of price points are these, just for the audience? Are we talking about, 10, 15, $20 million acquisitions now?
Yeah, I mean, I would say we're really focusing between 10 and 50 million for the most part.
10 and 50. So when you see that larger opportunity, because clearly then it's not a matter of getting, 15 or 20 investors for, a $25,000, $50,000 clips. I mean, are you looking for that major anchor investor? I mean, if you were to take down when you take down a $50 million deal, is it you already have that equity partner in your back pocket, that anchor? Are they a $10 million investor? What does that look like? And I got to imagine that discussion with that anchor is going to be different than just that friend and family who is just kind of along for the ride.
Yeah, I mean, look, now it's, instead of, we're no longer syndicating deals anymore, and it's a lot more focused on, institutional family offices, private equity firms, and asset managers. And I think, the real important part of that today is really exemplifying to, whoever our partner is, that we're an institutional platform, and that, the quality of these transactions. And, there is still some, I wouldn't say leap of faith, but, in some of these deals, New York's a very competitive space. So we still have to have conviction of these deals. And on a few of these, we've had to tie deals up and feel confident that we can get it done. But, at this point, we've done, 75 deals, have built a really robust platform, and we have a lot of confidence in our ability to execute. And that allows us to really graduate from that, scale that we were doing of 10 to 20 units to now 50 to 80 units, and our hope is that we continue to keep evolving and doing more institutional deals.
So it's not just that you've acquired 75 properties, you've done it in arguably the most competitive market in the world. So when you say about taking down deals, this is not, hey, Alex, here's 60, 90 days of due diligence and put down a $25,000 soft deposit. I mean, you're in many cases you're putting down 5-10% hard day one, and maybe you get 90 days to close, and obviously this is all kind of market dependent, but you really have to have everything teed up and ready to go. So I would assume when you have that anchor, that major investor, you're not having that first conversation with them when you present this $50 million deal. You've been showing them, you've been meeting with them, understanding what they want, so to find that opportunity. So, and again, you saw this all from the other side at RWN, so you understand how this works. But I think for our listeners who have been raising money from friends and family and they want to make that institutional jump, kind of what is the difference, I guess? I mean, we could say trade-offs. I mean, on one hand, pretty obvious if you're looking for a larger deal, a larger equity check, you're going to need to graduate to the institutions, unless if you've got an investor base in the hundreds or thousands. But with that, there's obviously more reporting, more requirements, I would imagine, more control, right? And then there's the economics consideration as well. I mean, I know we've had a lot of people on the show say, I'm happy with friends and family, it's easy, and, the economics are great. So I know I just threw a bunch of stuff out there at you, but kind of the difference of those friends and family deals as opposed to graduating to the institutions.
I mean, look, I think part of it is obviously having a good deal and solid underwriting and having something that's, very downside protected and having a good deal is part of it. But I think, the bigger part of it is really having the right platform and really showing to investors your ability to execute, whether that's, the ability to get projects done, get it done on time, on budget, achieve your underwriting on rents and cash flow appropriately and ultimately exit deals is really what investors want to see, and a track record. And, as we've built more and more scale, we've been able to show, that we've been able to do that multiple times over. And that has allowed us to build a good reputation in the market, but also, really exemplify to our, investors, this is, how Peak operates, and it gives them, a level of confidence to, work on a larger deal with us.
Well, Alex, I knew having you back on the show was going to be tremendous because, and for those of you who did not hear our first conversation, it would be really good if you, in fact, I'll say this when we open the episode, to go back and listen to that first episode, because I'm sure people see that certainly when you were planning for this, it'll be very clear that you were building this thing to grow exponentially. And now, clearly, you've accomplished that goal in a very challenging market. And as we said, in the one of the most competitive markets, if not the most in the world. So, Alex, my final question to you would be, it's almost like how do you do it all? We talked about, getting in the weeds on deals, but I mean, you seem like a person to me that you're just, you're out there front and center. You're running a company, you're talking deals, but you're also out there at events. You all have done a great job of kind of getting the word out there on what Peak is doing. So how do you personally manage your time? How do you prioritize what you're doing and get it all done?
Look, I think it's just learning ways to be efficient and learning ways to allocate your resources appropriately and having good partners that you can kind of divide and conquer, in the right way. And, we've figured out, it's really become, kind of known to our platform that, I'm very good at finding deals and sourcing off market opportunities, finding capital relationships, and really, being the kind of lead generator of the business. And, David, who was, co-founded the firm with me, was really the operational side of the business. And, by having that split of responsibilities, and it was actually funny because at first we both wanted to be the acquisition guy. And we realized that just doesn't work because we're just going to be kind of talking over each other and it becomes a conflict. And once we really, started finding our lane and focusing on that, it allowed us to really hone in and divide responsibilities and have trust in the other that we're going to get it done well. And having that right partner and now, partners, really allowed us to scale from, one deal to, where we are today.
Awesome. So Alex, this has been tremendous. Thank you again. For our listeners who want to find out about more what you're doing, where should they look for you?
They can email me. We have, an Instagram, Peak handle. Happy to, speak to anybody that's interested in learning more about the business.
That's awesome. Well, thank you again for joining us. You've been super generous with your time. I know you got a lot going on, clearly in a good way. So just really appreciate you taking the time and sharing what has helped you gain that insider's edge to real estate investing. So thank you again for joining.
Thanks for having me.
And thanks everyone. Always, especially those of you on the live stream. It's a great thing that we're doing now to actually put the videos out live on LinkedIn, Instagram, Twitter, YouTube. And so for those of you listening on Apple, Spotify, I know you like this episode. If you didn't, I don't know what else to tell you, that there's a lot of incredible information that was provided here. So forward the episode to a friend. That's how we get the word out on the show. And if you liked it, put a review, put some comments. We love the feedback as well. You can find this as well as all the show notes, how to get a hold of Alex at jamesnelson.com. So thank you again and look forward to being in touch.
Thanks a lot.
Thank you for listening to the Insider's Edge to Real Estate Investing. We appreciate your subscribing and sharing with your friends. If you haven't already, please connect with James at James Nelson NYC on LinkedIn, Instagram, and Twitter. Please also visit jamesnelson.com, where you can find the show notes and other episodes, along with an exclusive video series and other helpful resources, so you can gain the insider's edge to real estate investing. Until next week.